All right, we're getting some bank earnings in, so let's check out JP Morgan and see. This is the first big bank report, and it's coming in better than expectations as always. And you see here the actual number versus some fake number that somebody estimated, and it's better than the fake number on almost every account, except for the loss provisions. A bigger number is worse. Um, so here's JP Morgan revenue still looks okay. They're losing some interest income, which is their main uh, you know, bank interest income. But they started entering into the stock market equity trading sector, and so this is a new section of their business that has been growing and has grown some more over the past uh, quarter. Is still growing, which is good. And so this is a pretty good bank that is it's going to be doing better than probably like Wells Fargo or something like that, who's been getting in trouble. But here's a couple of big things to look at. Here is the loan loss provisions. This is funds that the bank holds to basically handle people that are going to default on their loans. So they're building a huge fund, and this is just 9 billion more that they put in this quarter. The total fund now is, I think it's 34 billion. It's almost to 35 billion, and so that's money they're expecting to lose probably over the next year or so as people start, people are already not paying on their loans, but they're getting help from the government where you can defer your mortgage payments, where you can go without paying some auto loans or some credit card loans for a little while. But at some point, these are going to be defaulted on or negotiated down. And that's what this fund is going to be, money they lose during that process. And so they're building a pretty big fund to handle these solvency problems. And that's going to be something that, well, it's already started, but when it really hits, I think it's going to depend a little bit on how much the government can kind of push that off before it really hits. But definitely, auto loans are massive, and yeah, and so right, return on equity down 13.1% from last year, and then the actual earnings here is a huge number that is minus 52% year over year. So this is a really bad number, but again, you can see versus the estimate, it's still good, I guess. Let's go take a look at the charts. So here's JPM stock, JP Morgan Chase, and this has been a relatively weak chart, a little bit weaker than the general financials chart. And so JP Morgan has a couple of things that are interesting. They've been getting more into equity trading, which has been growing and it's been good for them. And they're also a massive holder of silver. They have a monstrous silver position. They have over half the world's monetary silver vaulted in their own vaults. And so I'll talk about the SLV, which is this is the silver in the JP Morgan vaults. The SLV is the JP Morgan silver. JP Morgan's the custodian of SLV. And so, yeah, so here's the kind of reaction that we're getting so far from a terrible financial report that is better than expected. We had this move up prior to the reports coming out, and now we've just kind of had a little bit of an off-market hypey move that's just kind of reversed a little bit. So we're not seeing anything too crazy yet. It didn't really rip one way or the other on opening. I mean, it came down a little bit off of the sort of the news, but yeah, we're not getting much of a response yet on financials, and so we'll want to see. JP Morgan should be a good one to watch, sort of to lead earnings season, and see the financial sector should be a leading kind of sector to watch in the market. And then also, of course, watch the Qs and see if they start coming down, to see if if the infotech sector that's been leading everything gets weak, to see if there's any kind of an actual move down kind of shaping up here. But as for now, just kind of a minimal response to that earnings report, and JP Morgan should be one of the better ones. Let's take a look at the XLF. And you can see it's a little bit crazier and a little bit of a more of a positive kind of bounce from the crash than JP Morgan did, but the same kind of response here to the earnings reports coming out is just not much movement, which is interesting to see. And then I wanted to talk about the SLV because JP Morgan is the custodian of the SLV. And so on the SLV, we had this this zone. We got a technical spot that looks like a good breakout here, and it did in fact break out and follow the gold breakout a little bit. And so yeah, this is a good technical setup for silver that I pointed out in my silver video last week. And it did in fact break out, although I don't really love the kind of the environment for silver yet. I'm trying to find when that's going to happen, but I don't think it really has yet. Because for silver, you want a good commodity environment and you want a high inflation environment, and then yeah, you want the dollar just to be, you want people scared of the dollar. So, I mean, as of right now, let's take a look at some indicators for those sorts of things. So right now, I mean, the dollar is still, it's just kind of wobbling. It's looking like it's getting weak, but it's not breaking down yet. It's still above long-term support here. And so this yellow line is like a 10-year support line that goes way back. It goes way back. So yeah, I've been pointing out, the theorists like Brent Johnson that are claiming that a strong dollar is going to happen. Like, this is not a super bold thing to point out. Like, the dollar has been on a bull market for like 10 years and it still is. And so I don't think projecting, like expecting a strong dollar is anything super crazy. Like, that's what it's doing. It's been doing that forever. Um, Projecting it to break out of this trend is a bigger thing to predict, I think. But it seems like most people expect it to break down, and it could. And if it does, that would be good for silver, I think. And that would be an inflationary signal. And then you could watch and see if the bonds start trading up, like if the interest rates start going up. But right now, it hasn't broken down, and it's not set up to break down. It's still above resistance. So, and it's close though. It's close to it. So I won't, this is something to watch closely over the next week or two to see if the dollar can break down. And then if you take a look at the Treasury bonds, Treasury bonds have been. Well, this is the spread. This is a yield spread between the 5-year and the 30-year. And so this going up is flattening the yield curve out, which is not necessarily very good for inflation. This is kind of something that happens in between a move. But if we take a look at some individual bond yields, like the 5-year is getting weak. It hasn't really broken down yet, but it doesn't look strong. And so you want the yield to be going up for inflation to be taking hold. Like, these yields should be trading up, interest should be going up, the dollar should be breaking down. None of that stuff is happening right now. The bonds aren't breaking down. Like the bonds are weak. They're not going up. If they actually break down, that's going to be more of a deflationary environment. But right now they're just kind of looking weak. Dollars, yeah, basically nothing has really broken either way yet. Everything's just kind of hanging out. And if we do see these things break, then we can start saying like, okay, it looks like it's making a move towards an inflationary or deflationary kind of environment. I don't know what's up with the 20. Oh, it's just a new chart because they just introduced the 20s. But yeah, the 30s are getting weak, and the 20. This is an entire new series of bonds that the government just issued. So that's a look at sort of the liquidity spectrum. Like this is a whole new series of longer term bonds. Um, so you can expect the government is trying to spend more money into the economy to drive some inflation, just because they're issuing all of these bonds. But we haven't actually seen that happen. And then I guess if you look at the different sectors here in the market, um, like a high inflation environment, you would expect the stock market to go up with inflation. And if you see the bonds breaking down, you see deflationary environment, like that should drive solvency risks and drive, bankruptcies. And so right now, like the IWM, this is the Russell 2000. These are the small caps that have the most exposure to those kind of solvency and bankruptcy risks. And so this should be a really weak sector, unless we move into a higher inflation environment. If it stays where it is now or breaks down farther, this should be a weak sector. And it has been kind of weak, but it hasn't broken down again. And then the financials also, with the low interest rates, that just crushes the financials. I mean, we've seen the last 10 years in Europe, they've had low or negative interest rates that have just been terrible for the banking sector over there. And is it possible? Can the Fed stop it? I mean, I don't think the Fed wants negative interest rates, but it may happen anyway. And so that's something to take a look at. But for now, for me, the gold breakout is more reasonable than a silver breakout as far as the monetary environment, the inflationary environment, because gold can do just fine in a deflationary environment where they're printing a lot of money, but like the commodity prices are coming down. Whereas for silver, those commodity prices coming down in a deflationary environment would be a really negative draw on silver. Um, and yeah, so I guess silver's making a move, but I don't really buy it on what actually should be good for silver long term. And right now the market's weird. Like like silver and gold moving without fundamentals supporting. Well, I mean, I think the fundamentals are supporting gold moving, but not so much silver right now, which is it's kind of weird. I don't know. Silver is kind of strange to me right now, what it's doing. And I know everyone's saying like the balance sheet's going way up and everything like that, um, but the bond yields have been coming down, and all the Fed, recollateralizing and creating a ton of reserve money for all the banks across the whole world, basically. Like that doesn't create a bunch of inflationary pressure that should push silver up. Like you need actual commodity inflation in international commodities, and that environment isn't happening yet. So that's just kind of a look at the financials and the related monetary assets, which JP Morgan is very much involved in both. So the SLV is basically JP Morgan's paper silver, and and it's going up, and the financials haven't really responded much at all to the news or the earnings season yet. So I'll take a look at some more financial stocks, and this is not investment advice. And I really don't see a trade on. I don't really see a trade on like the financials or anything like that right now, because it's been weak, and it should be a bearish kind of outlook on the XLF, but I mean the stocks and the fundamentals aren't really affecting each other that much, and the liquidity kind of tightening up has not dropped the stock market. It's just kind of stalled it out, and so it's just kind of stalling out, and we'll just have to see. Like later this week, we'll see if the balance sheet is going up or down. We'll see the treasury account. We'll see if the bonds are breaking or the DXY is breaking. Like there's a lot of things that when they start to move could be good signals, but none of them are moving right now. Um, so I think it's still just kind of a wait and see on these financials, and we'll see what we get. We'll see what we get when as these earnings start coming in. And that's it for JP Morgan for right now. This is this is a pretty interesting bank that has, I think it's really one of the better banks, and it's lower than like the general financial sector, which is interesting. But this is a bearish sector, especially if the interest rates keep going down. Um, yeah, this is a wait and see what happens here. I don't really see much of a trading opportunity in either direction. I don't really trust like the the charts to go down against the insanity that's going on now. But yeah, I would say like the majority of the nonsense kind of movement that's going against fundamentals is happening in this infotech sector. These are the Qs. And so if the Qs really actually start to break down, um, that might be an indication that fundamentals are starting to actually matter again, in which case the financials would be probably the worst sector. And so yeah, that's something to watch also. So none of it's really happening yet. Like the Qs pulled back a bit, but they haven't started like an actual move down. And then watching the dollars, watching the bonds, watching the Qs, seeing if any of these things break, and seeing if you can get an inflation outlook, I guess is the thing to watch over the next week or two. Because I think we probably will get a break on a couple of these things where it starts to move. We might get a trend change pretty soon. But that's the update for today, and happy trading.